Good morning, everyone. I am Dylan. I'm a research analyst at Messari, where I focus on DePIN. Topic of this conversation is delivering on the momentum and entering a new phase of DePIN, which I call DePIN Fall. DePIN market cap is now 21 billion. It's actually up 443% since this time last year, depending on how you define DePIN. As we can see, large appreciation across the top major DePIN protocols, largest being Helium at a 500% increase. BitTensor didn't even have a token last year, and most DePINs are up well over 100%. So also DePIN fundraising is up 437% so far in 2024 compared to all of 2023. So 334 million has been raised for early stage companies. 97 deals have been done. Just looking at 2023, we can see a massive difference. And even compared to 2022, I think we're well over double of what we were before. And we've seen some very large rounds in DePIN. IoTeX is actually the largest this year at 50 million. But we're also seeing it across the board. GPU compute networks like IO.net, Dawn, which we'll talk about later, decentralized fixed wireless broadband, Daylight Energy, decentralized energy. So DePIN projects are raising across the board in much larger volume. So I kind of want to look at the evolution of DePIN. So this was Messari's sector map in January 2023. Just a handful of protocols. We'll notice some of the more recognizable logos like Filecoin, Akash. Not a lot happening. This was our DePIN map 6 months later. We're starting to see a lot more activity. The energy networks are growing. We're seeing more sensor networks. More happening across the board. Wouldn't say it's a massive industry yet, but it's definitely picking up steam. And this is our most recent DePIN map for September. So we're seeing energy networks triple. This is just an illustrative map. So there's actually hundreds of DePINs emerging. We're seeing tons of AI, ML, and inference networks coming out. We're seeing environmental sensor networks, more happening on the wireless front. We're seeing more primitives being built for DePIN, new emerging use cases in gaming, robotics. So we're basically seeing across the board, across a wide variety of industries, new DePIN projects emerging. We're also seeing a diversity in where these projects are built. So Solana is leading, followed closely by Ethereum, but we're also seeing the DePIN-specific L1s, IoTeX, and Peak get a lot of new projects, and then projects across the board from Polygon to Cosmos. So DePIN's being built everywhere. There's a massive uptick. The markets are up a lot, both in terms of fundraising and in terms of public token valuations. So I kind of want to answer why this is happening. I'm going to start with the theory and why I think DePIN is better than traditional physical infrastructure, what I call TradPi, for certain types of infrastructure deployment. So first, crowdsourced CapEx. So DePIN's able to leverage crowdsourced hardware. This eliminates the need for a single entity to raise capital for a network construction. Has superior unit economics, so you're able to distribute CapEx and OpEx among local infra providers. You have localized advantages. This leads to lower costs and more scalability. Global scalability is possible from day one. So DePINs can be built in parallel by participants distributed around the globe. This removes bottlenecks and allows quick expansion. Then looking at blockchain tech, we have automated backend infrastructure and composability, so we can leverage crypto payments, smart contracts, DeFi, and everything else that's been built in crypto, which reduces complexity and costs. And then permissionless censorship resistance, and this just basically eliminates reliance on centralized authorities and just allows anyone to contribute to the network. So what I want to do next is highlight a few of the rising sectors in DePIN, which I think are solving real-world problems that are tangible and creating real value from day one. First is the wireless industry. So first looking at the mobile technology. So this generally takes place where an infra deployer acquires a hotspot. It's able to connect to a larger mobile network, and then everyone around him can connect to his hotspot without having to go directly to the carrier. So what this does is it lowers cap in terms of just having more efficiency of expanding the coverage of the network, and it outsources OpEx to hotspot operators, so no central company has to take care of anything. It offers significantly cheaper plans. So Helium Mobile is $20 a month compared to $60 to $160 for a conventional plan. That's roughly equivalent performance. And more importantly, I think it's disrupting complacent monopolies. So AT&T, Verizon, and T-Mobile comprise 99% of the United States' $300 billion annual revenue telecom industry. There's less innovation happening. They're very institutionalized, and I think DePIN can kind of shift things and move the industry forward. So examples are Helium Mobile, XNet, DABA, and Carrier One. Get a little bit more into the wireless industry. Since the 4G era, which is 2010 to 2020, we're seeing spending growth far exceed revenue growth. So before that, in the 3G era, it was profitable or roughly equivalent. It made sense for these large mobile and telecom companies to spend and expand networks and coverage. Now they're losing money oftentimes. They didn't necessarily foresee this. And as we continue building 5G networks and then go to 6G, they're less incentivized to expand coverage, which can reduce the potential of more advanced technologies in the future. And I think we need a more capital efficient solution to expand coverage. I think DePIN's very primed for this. So we can look at Helium Mobile. So they launched nationally in the US in December of 2023, and they've reached 100,000 signups in July. So what they do is they basically partner with T-Mobile. You pay $20 a month, you get full internet mobile access, and if they don't have coverage in an area, you fall back to T-Mobile's national coverage. They've already deployed 19,000 hotspots globally, and growth is continuing to go up. They also have an offload subscription platform where major carriers can basically shift coverage to Helium hotspots. So these carriers' subscribers don't even know they're using Helium, but it enables better coverage at a lower cost, and some of that value accrues to the Helium Mobile token owners. So we're seeing both growth in terms of expanding network coverage and taking on existing mobile carrier supply and demand. And I think the markets are starting to recognize that these are real fundamentals that are driving real value. So see, on July 15th, Helium Mobile surpassed 100,000 signups. And from there on, its price action's been diverging significantly from the crypto majors. So Helium's up over 100% over the last few months, whereas the crypto majors are down or flat. Another technology I want to highlight is fixed wireless. So fixed wireless broadband is basically, you have a bunch of smaller antennas distributed around, and they emit internet bandwidth to each other. And what we're seeing with crypto is you can basically get a node operator to buy wholesale internet bandwidth at what's called an internet exchange or a data center, where internet's very cheap, like 50 cents for a gigabit of internet. And then they can basically pass on savings that big mobile carriers or big telecom companies don't provide. So telecom companies have a monopoly over internet markets and are basically charging 100 times more for what they pay for internet bandwidth to end users. And through this, we're starting to see a shift of internet ownership, infrastructure ownership from monopolies to households. And we're also able to offer multi-gigabit speeds through this with higher scalability than fiber optics due to recent advancements in telecom tech. So yeah, just like looking at the major internet types, you have DSL, cable, satellite, 5G, fiber optic. Fiber optics historically been the best performant, but it has low scalability since you have to build physical cables. Fixed wireless is very scalable and less expensive, but there's line of sight issues and connectivity problems. That's recently changed due to changes of law in spectrum licensing from the FCC, as well as new advancements in point-to-multipoint technology. So now fixed wireless is able to offer high performance, high scalability, and it's much more suited to a decentralized network since anyone can go and buy basically antenna systems, which they can deploy as nodes and run a fully decentralized system. So there's a big protocol called Dawn, which really recently emerged. I won't go too deep into it, but I just want to show the general architecture. So you start at a big internet exchange from the big telecom companies. Bandwidth is transmitted to what's called a bandwidth node, which goes downstream to a distribution node and then to users. And this basically lets anyone buy a node, connect to the wholesale center, and bring internet all the way down to the end user. And this can offer 100 times cheaper internet. So instead of paying $70 a month, you can pay basically nothing as an end user. So it's basically making internet free. And we're already seeing real deployments. So Dawn hasn't fully launched yet. They're in testnet, but they already have bandwidth nodes at 4 distribution centers in the New York area, 240 distribution nodes, and this can cover an area for supplying 3 million people with internet potentially. Second sector I want to highlight is energy, which we call DGen for decentralized generative energy. So first big use case are virtual power plants. So these connect decentralized energy sources like solar panels and batteries through a cloud-based system. What it basically enables is balancing supply and demand for the grid. So if there's a shortage or surplus, the grid can better be stabilized through a decentralized market where you're selling power back or buying power from these virtual power plants. And this is a massive growing industry. Solar energy is now the cheapest source of energy. It's cheaper than fossil fuels, and it's going to be about a 300 to 400 billion market by 2030. So an example of this is Star Power Energy. They have 5K daily users, 13,000 devices activated. They've already scaled globally. And they're basically already collecting data to basically better inform power grid providers and create like a robust virtual power plant. So you can see some of their plugs that they're selling. And the idea is that eventually solar panels will be implemented and it's going to be this global decentralized energy grid where the cheapest and most efficient energy distribution system can be created. This is another example of Daylight Energy. They have a mobile app. They basically go to your home, convert it to solar. You don't really know there's crypto going on in the background. And then they're basically connecting data and your energy to this virtual power plant. You get points. You can redeem them for Amazon gift cards. And they're basically building this very robust energy trading infrastructure fully built on blockchain on the back end. Another vertical I want to look at is carbon credit production. So the voluntary carbon credit market. This is basically like Microsoft buying carbon credits to offset their CO2 emissions. Projected to go to 50 to 100 billion a year by 2030. Carbon credit markets have historically had rampant fraud, accounting difficulties, low quality market infrastructure. What DePIN and crypto can do is provide carbon credit market infrastructure, incentivize deployment of CO2 reducing tech like solar panels. So here's kind of the projected growth. This could be a $100 billion industry according to Morgan Stanley by 2030. The compliance markets in Europe and California are very much larger, and there's also potential to tackle those. So there's massive demand here, and it's early, and I think crypto is better suited just because it has existing blockchain rails and there's no traditional market infrastructure that can support any kind of carbon credit system at scale right now. So there's this protocol called Glow. They're already deploying solar panels where they have this complex system of basically creating carbon credits from solar power production. They're ready to distribute it across the United States. They're just about to open up solar farms in India, soon in Argentina. So we're seeing real-world adoption and real-world solar deployment using DePIN and blockchain. Another example is Daylight. They're basically retiring carbon credits, partnering with ClimateDAO. It's a brand new initiative, but just kind of goes to show the real-world impact. Third sector I want to highlight is compute. So we're seeing significant growth in demand for GPU compute due to the rise in AI. DePIN can lower the cost of compute by as much as 90%. Demand for AI compute, including energy costs, could exceed $7 trillion in value. And also, DePIN, crypto more broadly, can enable more decentralized control of AI models where big tech doesn't drive and can create all the AI models, and it's more distributed across the world. So the cost of training AI models is growing significantly. It's probably not very impactful to try and make it more efficient, and it really comes down to compute costs. So we need more NVIDIA chips, GPU chips, to basically supply the rise in AI. And if we look at the comparisons between DePIN provided compute in something like AWS, you can see a cost $1.50 per hour, I believe, for an NVIDIA A100 versus $5.12 for Amazon. So that's a massive price difference fully enabled by decentralized compute networks, and it could definitely tackle a large market and help provide more compute. Here's one example. This is IO.net. They launched earlier this year. They claim to have 300,000 verified GPUs. So they basically are collecting GPU usage, idle usage across the world, and then deploying it across their network for much cheaper. And we're seeing dozens of these emerge. We'll see who the winners end up being, but it's definitely a real-world use case that I think DePIN is really enabling. And then basically this compute is supplying the base layer for a full decentralized AI system. So you can see like Akash, IO.net in the top right, but there's all kinds of AI inference and training crypto projects, and all these can integrate together and kind of reduce reliance on bigger tech, at least in theory. But we have some of the smartest minds kind of working on these projects, especially in BitTensor, Jensen. So lots of potential here, and only really can happen through DePIN. I'll briefly highlight this. Also, cloud gaming, augmented reality. So we can leverage high-end idle gaming GPUs to stream games to more lower-end hardware. This can lower latency since the GPUs can be closer to the end user as well as cost. 39% of gamers cite latency as their top frustration in gaming. Global video game market's $347 billion. Most of the companies tackling this are very early stage, but it could definitely create a large impact and something to watch. I'm going to skip this for time. What I also want to do is we're obviously seeing a lot of momentum and real-world impact from DePIN. I wanted to highlight some of the challenges of DePIN and how we can overcome those, and what the industry should really be focusing on, given like all the momentum and attention going towards the industry. The first is DePIN needs more revenue. So the DePIN sector market cap to revenue multiple is about 1,000x right now. So $20 billion in market cap, 20 million in revenue. So we can see like a wide distribution of revenue to market cap multiples as high as the mid thousands to as low as 8.4 with Glow, which is the solar panel carbon credit project I was talking about earlier. And across the board, we just need to increase revenue, increase profitability. I think obviously a lot of these projects are early stage, and they just need to grow both their supply sides and demand sides. This is an active issue that over time definitely needs to be resolved if DePIN's going to be the first crypto sector to kind of grow based off fundamentals rather purely or mostly on narrative. Challenge 2 is decentralized verification for high-P protocols. So if you were watching or in attendance for the fireside chat, this is basically what we were talking about. Hasib at Dragonfly had a tweet where he said, "My rule of thumb for DePIN projects is the less P, the better." And what this basically means is the more physical a DePIN project is, there's higher verification costs, fraud rates, then higher centralization. And it's no longer really a DePIN if it's centralized, it's just a PIN, and that's kind of the worst of both worlds, where you're not getting the benefits of decentralization. And its point is verifying digital work computationally on things like storage networks and compute networks is much easier and scalable than for physical work. And that's broadly true. I think I want to clear up two things. One is, what does P mean? So I think if all of DePIN works and operates on very physical infrastructure, so storage and compute needs servers, it needs chips, solar needs solar panels, wireless needs antenna infrastructure. So everything in DePIN is physical. The question is more, how easy is it to do computational verification of work and proof of resources? And I don't think necessarily what we think of higher P protocols are necessarily harder to do this for. So for example, Dawn, which is the fixed wireless network I was speaking about, they have a full system of proofs where basically you can verify that they have a node has the bandwidth and the ability to transmit bandwidth is at the right location. And this can be done like pretty much fully computationally with no centralized verification. So it's a very decentralized system. It doesn't really have that higher P problem that Hasib was talking about. So here's a diagram. I won't get into the weeds, but it's fully computational and it's fully decentralized, and it seems like a high P protocol, but it really isn't. This is the Dawn validator. You basically just download a Chrome extension and you can validate the Dawn network. If you know what Grass is, it works a bit like that. And I think it's basically not much more difficult than Filecoin or a GPU compute proof of work type validation. Second point I wanted to highlight is just because a DePIN protocol is harder to verify computationally doesn't mean that you can't do it in a decentralized way. So this is Glow's overall network architecture. It's fairly complex, but it basically involves in-person auditors going to solar farms, verifying that production was created, verifying that solar panels were installed correctly in the right places. You can use like space satellites to look at all this stuff. And what this does is increase the cost of verification. And it is more centralized, but it's still decentralized overall. I think the real question is it worthwhile to support these higher P protocols that might be harder to verify, but still create immense economic benefits and immense environmental benefits? And I think on a case-by-case basis, each system can design a verification method that is decentralized, even if it's cheaper and more complex. And I think it's for both venture capitalists and founders to kind of get in the weeds and figure all that out. Third challenge I want to highlight is supporting DePIN founders. So DePIN is cross-disciplinary. You need deep infrastructure knowledge in your vertical, whether that's energy or telecom. You need deep crypto knowledge. You have to understand how consensus mechanisms work, crypto economics, cryptography. Not a lot of people have both of those skill sets. So what we see is either infrastructure founders coming to crypto or crypto founders coming to infrastructure. And I think as an industry, we need to figure out how to best support these founders and bring in more talent to the industry. So that could be better education resources, more funding for DePIN, abstracting complexity away so that DePIN founders can solve specific problems, infra modules. I think IoTeX has a good approach to that. And just making it easier for DePIN founders to flourish. Challenge 4, bootstrapping supply and demand sides. So on the demand side, we often see DePIN successfully bootstrapping the supply side, so they have a bunch of resources to sell, but there's no demand or like a lack of substantive demand for the resource. And this especially happens with compute and storage DePINs, where developers might value having high quality customer service and integrations with AWS and GCP over directly having cheaper raw compute. They get more overall value from those integrations. And I think a good potential solution is just centralizing the demand side for these kind of protocols. So full decentralization on the supply side, while a Web 2 company handles growing the demand side with marketing and operations and customer service. I think a new DePIN called Protea is doing this fairly well, where they basically provide an API for AI image generation, and then on the supply side, it's like a full DePIN that's decentralized. Then supply side constraints, this varies broadly across DePIN, but protocols just have to make sure that they can sustain an economically sustainable supply. So if it's too expensive to produce a resource or there's low barriers of entry for new DePINs, tokens might not accrue enough value, and that's going to disincentivize infra providers. So this is also an issue on GPU networks, where there's just a lot of networks entering the market, and they're not all that differentiated at the moment. And then on like the wireless energy side, like things are very early, and these protocols have to make sure they find long-term financially attractive value accrual that makes sense for everyone. So we've obviously seen DePIN's market cap go up a ton. We've seen fundraising up. Both are up nearly 450% over the last year. DePIN is solving real problems across a wide range of industries, from energy to wireless internet. Crypto is also, I think, placing its hope on DePIN to finally deliver on the promise of blockchain tech and having real-world value and impact. However, DePIN faces a wide range of challenges and requires builders and industry leaders to put their heads down and execute and really deliver on the momentum. So I think this phase we're entering is what I call DePIN Fall, and it's a time where DePIN needs to start executing as an industry and lay down the foundations for the future of both DePIN and crypto's growth. Thank you.